Hi there, this is the thing about PDD holdings. Right now, the market cap is about $146 billion. Right? And the price, $102, right? Now, let's value this company. We'll look at what they have. Total cash, if you look on the balance sheet, the latest report Q1 2025, you will see that total cash is about $52.2 billion. Compare this number with the current market cap, you see that it's quite a lot. Then, you also have to look at their debt. How much debt do they have? And their debt is quite low, only 700 million, so 0.7 billion. And if you do the math, subtract their debt from the total cash, the net cash position is about $58.4 billion. Again, compare the final net cash position with the total market cap, 146 billion. And see, it's quite a lot. Now, this is not their value, their true value. The true value of this company lies in their revenue and earnings. So besides this cash, you also have to add their revenue and what they earn on this revenue, right? So if you look at the revenue for PDD Holdings over the last 3 years, it has increased quite a lot from 18 billion to 44 billion to 54 billion and more recently 13 billion for the last quarter Q1 2025. And if you look at their growth rate, 18 billion to 44 billion, a double, right? A huge growth rate. From 44 billion to 54 billion, another high growth rate. Not a double, but over 50%. And this is quite a lot. And again, look at their earnings. Here, a nice growth rate. You have here almost a double. And here, almost a double. Amazing. And that's why the market cap went so high to over 146 billion. Now, of course, the stock price has declined more recently. And the market expected those high growth rates, over 50% in revenue and earnings. But you have to be aware of their size. The higher they get, the tougher it gets for them to grow. So this growth rate will get lower in the future. And if you look at the last quarter, Q1 2025, and if you wonder why the stock price has declined so much, you see that the revenue has increased only by 10% year over year compared to Q1 2024. So 2025 here. And this is quite bad. They missed the analyst estimates for revenue and earnings. And when you have something like this, the market have to revalue this company to assume a lower growth rate than 50% to 10%. And if you look at JD.com and also Alibaba, PDD Holdings has come in line with their growth rates. And this is a question mark. How much will their revenue grow in the future? Continue to grow by 10% or is just a short-term decline? You have to ask yourself this. And I'll tell you later how to think about this. Then, if you look at their earnings, big surprise here, a decline over 45% year over year. And this is quite bad. They no longer can maintain their margins. If you look at the past, just look at full year 2022. Net margins for PDD Holdings. 2022, 24.16%. Quite nice, a great business. 2023, 24.24%. A small increase, but this is still nice. When you see something like this, over 20% net margins, this is a great business. 2024, 28.55% net margins, and this is quite high, quite high. A great achievement. But more recently, Q1 2025, their margins have declined to 15.4%. Now, this is not bad to have net margins around 15.4%. This is not bad, this is quite great, this is still good, above average. But then you have to ask yourself what's next. Will those margins continue to increase from this level or maintain the same level? This is nice, or decline. You have three scenarios. If these margins decline, then this will be quite bad for PDD Holdings. The market cap will continue to decline, and so the stock price. If they maintain these margins and they grow with the economy in line with the competition by 10% per year, 7%, then that will be great. You will have a nice return. If they can increase their margins back to 20%, and it's unlikely, then the market cap can double again. So, to assess if their margins, their earnings, revenue will increase more in the future or be flat, just a small increase or decline, you have to look at their business. But before this, to look at the business, you have to understand why the earnings and revenue have declined. And especially their earnings. Why their earnings have declined and a reduction in their growth rate. If you read what the management said, they reduced the costs for merchants. You don't say in the direct way. This means they reduced their fees, right? Because of high competition, and they continue to charge high fees for merchants, those merchants will switch to Alibaba, JD.com, and other new players. So that's why they have to lower their fees, right? They have no choice. Not because they like the merchants or the consumers. No. Because of competition. And once you understand this, and you look at what they do, how they make money, you can see that they have two ways of making money. Online marketing services, here, which represents 50.9% of their total revenue, and transaction services, which represents up close to 50% of the revenue, 49.1%. Transaction services, every time merchants sell a product, they charge a fee. It might be on the total sales or per transaction. And online marketing services, when new merchants or current merchants want to advertise their products, like on Facebook, show ads to users to buy the products. Now, once you understand this, and you also look at the competition from Alibaba, JD.com, and other small players, such as from TikTok from China, and of course other small players, you will see that it's quite hard to maintain those high margins of about 28%. Because if JD lowers their fees, let's say from 3% to 2%, Alibaba to 1.5%, and if PDD Holding charges a fee about 2.5%, let's say, just an example, because their fees varies according to the services, then PDD Holdings have no choice but to lower their fees, 2% or 1.5% if they want to compete with Alibaba. So they have no choice. Their competition will force them to lower their fees. And if they lower their fees, the net margins will decrease. If the net margin decrease, you will have less in earnings. You already see a reduction in the net income and less in revenue, which means the market cap won't grow that much. Might decline even more from this level if they don't stay competitive. So it's quite tricky, this company, because not only they are forced to lower their fees, but if you look at their business, you have to ask yourself, what's their edge? What's their advantages? They don't have any advantage for the moment. If you look at JD, yes, they have their logistics. That's important. Look at Alibaba, what do they have? Logistic, cloud, and payment services, right? Alibaba has more and more advantages than all the other companies. Now, if you wonder how PDD Holdings succeeded to achieve this high performance, this high growth rate, it's because, not of their business, because you see they have no advantages. It's because of their partnership with Tencent. To find out about this, you have to read the annual reports, over 300 pages, and then on a small paragraph you'll find out that Tencent helped a lot PDD Holdings. And Tencent helped PDD Holdings to advertise on WeChat and other platforms, offer lower services, lower costs for their ads to attract users to PDD Holdings app. And then also Tencent helped them with the payment system, because PDD Holdings doesn't have any payment system, and also with logistics. If you know, maybe you read about Tencent also, has invested in other delivery companies, and they have more agreements. So PDD Holdings, the success of PDD Holdings was due to Tencent. This is the back of PDD Holdings. And once you understand this, it's much easier to look at their business and see their future moves. And as I said, we have here 3 scenarios. Their margins stay flat, decline, or grow more in the future. What I can tell you for sure, their margins won't go back to 28%. This is unlikely. This scenario is unlikely. Can't forget about this. Now here, stay around this level, 15.4%. If they continue to get support from Tencent and improve their operations, maybe they can expand into other services to support their e-commerce business. Maybe they can maintain those margins, about 15%. So in line. But if they lose the support from Tencent and the management doesn't invest in their business to build their moat, their competitive advantages, then their margins will decline, and so their earnings and market cap. So here you have to see for yourself if you want to take this risk and see if they can continue to maintain these margins. If not, this cash can be burned easily. They invest in their business, and if the return on that investment is not high, is low, about 2%, or with minus, the worst case scenario, then shareholders will lose this cash position. So you have to be very, very careful, because the competition is quite tough in this industry. And if you don't have, this company doesn't have any advantage, any moat, their margins will decline. So if you want better investment ideas in PDD Holdings, high returns, low risk, you can join my membership. Go to my profile, press join, and choose the level you want. And there you can have access to my portfolio and see every transaction I make, which will help you to increase your returns and find better investment ideas. And of course, if you want more, you can also have access to 1-hour coaching call with me, where you can ask me anything you want about investing. So feel free to check the membership. And that's it for this video. And if you have other questions, please let me know in the comments.